Welcome back. Well, the markets are holding with gains of close to around 85 points or thereabouts. Remember, the 50 DMA on the Nifty comes in at around this 19,600 odd. But it's been a good first half hour, actually. The Nifty Bank as well has crawled its way above that 44,000 odd mark. Yesterday, it came in for a hard knock. And the breadth of the market is looking very, very good, with 8 stocks advancing for just 1 stock that's declining. We have with us Mr. Madhukar, who joins us to help us out with a quick analysis on what we expect from the insurance space in the coming quarter. Hi, Madhukar. Good morning, and thanks so much for joining in. Well, tell us the key points that you're going to be tracking, for the coming quarter.
Sure. So, coming quarter, growth has definitely improved in Q2 versus Q1, so that's a positive. But in terms of product mix, I think for the life insurers, the growth is driven more by ULIP, with markets doing well. I think what will be important to see will be, how individual protection is growing and whether non-par products are holding up in the share, given, the interest rates have moved higher for other sort of products as well. So, and finally, on the margins front, I think broadly the street does expect slightly muted margins on a year-over-year basis. So anything, my guess is more than maybe about 200 basis points will be taken as more negative. Yeah, broadly these things would be watched out for in 2Q for the life insurers in particular. Yeah.
Madhukar, hi, good morning. Let's talk about it one by one, right? I want to discuss what's happening with HDFC Life because, it's been a good start to the year for that company. If you look at the numbers, right, the individual AP grew at almost 10%, almost double digit. The total AP went up about 14% and compounded, if you look at it, the individual AP has grown at about 15% in the last 4 years. But this stock is just not doing anything for investors, and it's been a frustrating 3-4 year period where HDFC Life has done nothing. Your thoughts on what the way forward could be?
So I think in relatively probably about 3 years back, I think the growth was a lot stronger, and it was the only sort of dominant player in the HDFC Bank channel. So since then, a lot has changed, and the valuation that the company was getting was a lot higher. Post that, actually, right now, the competitive intensity in the industry is also much higher. Their growth rates have come off. Having said all of this, I think it's still a solid, rock solid company. They're the product innovation leaders in the market. I think the brand inspires a lot of sort of confidence and faith from buyers of their products. So still, I think the company is pretty good. Having said that, I think right now what will be a key monitorable is after it has become a subsidiary of HDFC Bank, how much more support can it get from the bank? I think that's a key monitorable. So, broadly the sense is that the share of what HDFC Bank sells between, Tata, Birla, and HDFC Life share is closer to about 55-57%. And the street expects this to move a lot higher. Let's see, if that plays out, I think the stock could see a re-rating from here. I think that'll be a key monitorable for the stock, yeah.
But that's still your top pick, Madhukar?
My top pick would be SBI Life. I think
SBI Life, okay.
They on a valuation basis, as well as the growth that they're showing, and margins that they have, I like SBI Life the most right now.
What about sort of general insurers? The devastation caused by floods in Sikkim and the damage to some of the hydroelectric power projects. Have you looked at? I mean, who's the insurer? Will that cause any damage in the listed space?
sort of, plant-specific details, I don't have that. But broadly, what happens is when these are sort of large plants which are insured, then almost the entire sort of industry is carrying some bit of the risk, and which is again then reinsured, right? So these things do happen, and they do impact the quarter as such. But insurers have cat loss reinsurance, etc. So they get largely sort of reinsurance coverage of there, and it's not that it normally does not work out to be that bad. This quarter for general insurance uh, is expected to be better because what happens is this is a seasonally stronger quarter. A lot of the business gets written in Q1, and the expenses are upfronted in Q1. So this quarter, then the expenses are lower, so your underwriting surplus looks better. So in that sense, Lombard, we
Got
are
it.
expecting, yeah, we are expecting sort of better numbers, yeah.
Okay, okay. Madhukar, one of the things which has not been discussed very much is the the implementation of the new the accounting norms, Ind AS norms, right? Which is comparable to IFRS 17. And I
Right.
think the regulator wants that to be implemented from the 1st of April 2024, which is, pretty soon.
Pretty soon, yes.
Have you
And,
looked at this in detail? Will this make a big difference? It will change things in terms of how you account for premium received, how you account for expenses, etc. But briefly, what are your thoughts? Yeah.
I think two big changes. I think, within that also, I think the biggest change is going to be the deferment of acquisition costs. And once you allow for that, then you really don't need to get into the concepts of V&B, etc. So to that extent, uh, what happens is that the accounting profits are the basis on which you could value most of these companies. And the accounting profits would improve. The ROEs would broadly sort of go up. And my sense is that the life insurers would see ROEs of between 16 to 21% or depending on which company it is. And general insurers, the impact is a little lower because normally the business that they write is just 1 year. So the deferment of acquisition costs is there, but benefit is slightly more muted. It's much more for the life insurers. And over there as well, we'll see some improvement in ROE and profitability. So you could expect about 200 basis points, 200 to 300 basis points sort of improvement in ROEs for the general insurers and health insurers as such.
Got it.
Uh,
I just had a thought that I wanted to put forth to you on ICICI Pru, right? iPru has been underperforming its peers for a while. I mean, if you just look at the numbers, the APE growth this time was barely about 4% in the individual APE I'm talking about. Overall APE growth was actually a fall of 1%. Why is this underperformance there, and what is the expectation in Q2?
So, couple of things. It's a well-known fact that ICICI Bank is sort of not selling few and a very large portfolio of products in life insurance, right? So a bank partner which used to contribute almost 55% of iPro's AP, 3 years back, is now down to just about 15% odd. So and again, a principal bank partner is very important. I mean, life insurance, each of the other listed life insurance companies have a primary bank partner which is contributing significantly to their sales. So I think over the last 3 years, you've seen that rundown happen. So business has declined from that channel, and they've had to sort of develop other channels. So the focus is more been on agency and other banking partners that they've acquired. My sense is large part of the ICICI Bank channel decline is now played out. It will probably stabilize at these levels. And what was disappointing is that the other partners, AP growth was just about 2.5% even in the last month. So while July and August were slightly sort of better growth months for the company, September disappointed a little bit. And lastly, also on the group side, group AP contributes almost to about 18 to 20% of their top line. I think that is a fairly competitive business, especially the group term insurance where iGrew is present. And I think they'll also see some pressure over there, some top line pressure over there. Finally, on the margins, I think margins are also coming off for them. There were tailwinds with, the non-par products growing last year and also tailwinds in group term insurance. So all those are also sort of going away right now with the shape of the yield curve, etc. So I think that's going to be my sense. It'll probably underperform a little bit more and then do better. Once the entire thing is in the base. Yeah.
I've got it. Good conversation, Madhukar. Appreciate you joining in, and thank you very much for running us through your views on the entire space. Very useful. Well, let's talk about markets, right? From a technical perspective, though, it's our special segment, charting trends. We have